Good morning. Okay, so before we get to the markets, I thought we'd review yesterday's insanity, uh, which seemed either was it manipulation or is just are traders just getting out of their freaking minds. I mean, this yesterday just going sideways. Um, nah, it's just a tick chart, Alex. It's a pretty old thing that I had created. The color coding of the NYSE tick, neutral and positive, whatever, in extremes. Um, and so we sat here the majority of the day with the markets going nowhere. And just as they appeared, and look right here, the ticks pushed up toward that extreme level on this move up. Exactly what you want to see. This little dip on the bottoming tail bar down to support and the move up and the consolidation. And then the red bar ignored right here. And as it started to perk up here, in the room, I said, okay, I'm long the ES, looking for this thing to go. And as I watched it for a few minutes, I didn't say it. I'm like, this is taking too damn long. And I didn't egg. I had my stop under that swing low there, and it got tagged as this thing dropped like a rock. And, just seemed to be coming out of nowhere. The ticks went well below the 1,000 level and the retracement up, and then the sell-off again. And now Mr. Schizophrenic opens up this morning and saying, hey, the sun is out. It's a wonderful day. It's opening up here near the top of the range. And so this is, I guess, what they call Coronaville. I don't know, with these crazy times, but, the sell-off like this and then opening up like that, I just question whether it's manipulation or just crazy traders. I don't know, something or somebody hitting the wrong button. In any event, this kind of activity certainly is not the norm, but I guess in today's, maybe it is a little bit more so. About that drug manipulation. Okay, Debbie, maybe. Seems like, but almost every stock that of like 100 that I had on my thumbnails, almost every one of them dropped. It just seems crazy. It is crazy. Anyway, let's see where things are at here. All right, so here's the daily chart. The spiders there, and it was up at the top of the range. So you compress the data, and things just kind of look normal, right? Daily chart up at the top of the range, the gap up, and then a red bar now opening up here, as you can see, close to 256 toward the top of the red bar, but not taking it out. So almost all of these stocks that are green, lots of green here this morning that I looked at, the majority of them are all opening, within yesterday's range. So it's not like, okay, all of this green here is, stocks breaking out. It's not, but maybe they do today. We'll see. Maybe they will. So far we've been in a trading range now for a few weeks. Buyers at the lows, sellers at the highs. This arrow here is where our internals got to an extreme. Markets sold off to support and back up again. And we can just take a peek at that today. So, coming back up again into the bearish area for sentiment, and breadth continues to deteriorate here. It's not a positive sign, but you can't fight, you can't fight the trend, but the trend is sideways. So you got to be nimble. And, this doesn't mean it can't spike up and hit that 300 today or better. You can see the 200 just lurking right above that 300 level. Maybe, we'll see. Again, if we can clear these highs today, we have to consider longs. It's the only thing that makes sense. So, we'll see what develops here today. You can see the sentiment down here has been low the last few days, and that's helping push the moving average up into an extreme level. So Okay, we'll see what today brings. All right, futures. Where are you? So same story, here, consolidation. And this is, again, forgetting the intraday and looking at this time frame, this is bullish. And more so than here, because the wide range bar here was followed by a big red bar down, and it only made it to support and went back up again in a big red bar. Whereas we got a wide range bar here going up into resistance, which has created the void below. And so far, this is beginning of the day. I don't know what this is going to look like, but if it looked like this at the end of the day or deeper into that topping tail, got a consolidation at the top of a wide range bar, and we know that is bullish for prices to do that because it's creating a support area where there isn't any. And we got a topping tail being ignored. If at the end of the day we've got another topping tail, a red bar down here, well, my expectation would be going down to the bottom of the range, and then we'll see what happens. Okay. Weekly is still in a downtrend. Hourly is sideways. I'll be nimble. And Q's been the stronger. Yesterday got the topping tail with that little sell-off, and now prices are back up to the high of it. We'll see if we can break out of here today. And, from there, well, I guess we have to look for moves up to the old highs. We know the internet ETF is already there. The technology is close. Communications isn't that far away, those ETFs, which have been outperforming. So again, trading range so far sideways at the top. Let's see if it can break out. Qs, right, similar story there. 230-ish, 229. So right up there, and gapping back up. It's bullish, right? So now let's see what happens. Maybe taking out maybe the 5-minute high could be a go. We'll assess that as it unfolds. Dow, same story, similar patterns. It's been underperforming, but again, similar patterns there. The odds are on the long side continue to be in the winners, the NASDAQ and the tech stocks. So expectation is they'll continue to be the winners for now. And the Russell, right, been an underperformer, but similar pattern, right, over the last week or so. It came deeper into the next level of support, but popped back up, wide range bar. So far, red bar ignored. Today's low is the line in the sand, and anything in between yesterday's high and today's low is just noise. So let's keep that in mind. There'll be stocks on their own page, but as far as the markets go, more running in place. That's what's been going on. Oil up near resistance, so the expectation is it's going to stall here. Had a nice move off of the W bottom and now pushing up, and notice the wider range bar yesterday. So wide range bars after a multiple bar move suggest a stall in the momentum. Doesn't mean it's got to collapse. You can see it spent a week or so sideways, and now a wider range bar again into resistance, which is over here. It could pull down, of course, but a greater probability of consolidation and continuation to the major resistance area, whereas coming up to the major resistance area, greater probability of a pullback. Pretty much common sense. SPX, what are we going to do here today? Let's go back to ES. Trading range. 3,000 seems attractive, but you know what? If it clears this, maybe not so safe, right? Not so safe. Yeah. With buyers being proven to willing to buy down here, yeah, Paul, that, Alex, that makes sense. Below 2,900, so any pullbacks, you would think that, well, let's have two lines in the sand. Ideally, it's going to hold this level on a pullback, right? 29 29.25 or so, let's call it, give or take. Yeah, 29.25. And even better yet, minor support, 29.40. So where prices are at, resistance right now, if they clear, we're talking the futures here, 29.60, well, then below 2,900 should be a no-brainer as far as selling a put spread. Now, on the call side, we'd want to see potentially something like this, whereas prices broke out and then failed. And then with such a rejection of a level, right, our thinking would be, well, then selling a bear call spread would have high odds of working out. So whereas right now we're just within the range here. So look, if we say above, somewhere above 3,000 where this premium would be fine, and then below 2,900. Those would be our levels for today. And look at how that correlates to SPX, which we don't have 24 hours, but again, if we can get above premium above 3,000, and then we've got this unfilled gap here, you know, this has got to be opening up around here, and we got this hole underneath. So, you know, what's going to stop it if it does break below yesterday's low? There's nothing. So looking at, you know, we go back to the ES and see where that level is, and we don't have that support. Let me just do this. Things just don't match up. Without that, let's go to SPY. And we have to do this. All right, so below 287, we want to say, let's say below 287, 285. And so that's on the 15th. 15th. Well, again, just common sense, the gap would be the safest thing. But we give it a few minutes at the open and let's see if it actually holds on to the gain. All right, let's continue here. Doesn't get too late. Yeah. No premium there. No premium, no trade. You want to get closer to the danger? No risk, no reward, right? Bonds coming back down to the pivot low. The significant support is there, but now we've got a higher low there where it held yesterday. So set an alert down below here, see if it holds. You know, they use TLT, break below that pivot low there. Bonds will be going lower. And since it's been holding here, could look to this to move back up. And then, of course, ideally, yields to come back in. And again, it's just been in the trading range there. But markets like low interest rates here. And if they were to perk up and start pushing here, people are going to start questioning, well, what's the Fed doing? They're supposed to keep interest rates low. And that might jiggle the market. So just set an alert up above these highs here just to be aware. You don't have to watch it. Gold, right? Just sideways here, up at the top of the range, chopping around. Still bullish, long term. You can see the weekly. It's into this resistance here between 1,800 and 2,000, way over to the left, but just hanging out there. Looks like it'll eventually go higher. Silver continuing to show strength and pushing up here, and a little back off here this morning from this level. So our ETF letter might have to think about exiting this. We'll see if extra weakness today. And we always take a look at the transports. They're kind of like been dead in the water, but they survived falling over the cliff as everything else did. And so we'll see. Airlines up a little bit here. Delta showing a little bit of strength within its death trend, but maybe it's making a low here with this little downside shake to the downside. So it's positive, and even Boeing starting to show a little bit of life, putting in a pretty long base here. Ford, survived. A lot of things survived. So kind of, the junk, as I like to call it, trying to bring up the rear, some money flowing into the beaten down junk stocks. And, but the tech and the winners, they're not giving it up yet either. So, warning signs, the internals we covered, those warning signs are there. So when the time comes and the bell goes off, the exit will get crowded. Risk is starting to rise, but we'll go with what is until it changes. All yours, Dan.
All right, thanks. Good morning. Yep, you'll have heard me say 20 times, I don't understand this strength, but it doesn't matter. I'm not a fundamentalist. If they want to go higher, we will trade with them. We aren't that heavy in open positions, but we're 100% long. And, yesterday into the close, I said I had a bearish bias for just further continuation into this gap today. But I said also that the daily and weekly are bullish. So, when I said in the green room to tighten stops, it depends what time frame you're trading. And today's topic in MT Live, another very timely one, is how to manage any trade, objectively on any time frame. So we'll be talking about that. So the way you manage this 15-minute trade, as Greg mentioned, he was long here. That was a beautiful long setup, and then it quickly was a breakout failure and turned into a day trade short. So that's today's subject. So weekly options trader, we only have 2 positions now. MA, we have a put spread for Friday. We also had a directional that we trail stopped out at a profit. Look, that, folks, look, I got to put that in the manual. What pattern is that, Jeffrey? Ganga, Derek, Debbie? Textbook M top with a new high failure, a plus. Textbook, you can't get any prettier than that. It's an M top with a new high. So on the smaller time frame, we got out, took our money, and I give them a little wider room on the put spreads, and so I'm glad we're gapping up here today. It's for Friday, but that's beautiful. So many times people they look at resistance, like here. Is this an M top right here? From here to here? No, it doesn't have the shape of the symmetry like this does. It's just resistance. And yes, it's a breakout failure, but that's not an M top. So that's the difference. And then we have Pepsi. We had an Iron Condor, and we legged out of the call spread at a nickel yesterday. So that was very nice adjustment. And so we got the put spread component now for Friday. So that should lock in again. Swing and options trader, let me go real fast here to get to other stuff. BMY, we have a covered call. I tightened the stop to yesterday's low. CCL dog, we have a long call. And it's a bull call diagonal. We're long the June call, short the Friday calls. MDLA, I can't tell where it's gapping, but we're in trail mode. We entered this down here. Beautiful little bull flag consolidation after breaking out, price void. That was a no-brainer setup. 6 SIX. There was a lot of stocks that just look very similar yesterday. You know, this had a downside shakeout, bullish gap, price void. So we bought that yesterday. It's gapping up here. Jake, I'm as long as we can chop around for 30 minutes and take out a 30-minute high on the spiders, SPX, I'm long biased. So it's only if we fail miserably here at the open would I consider a condor. SPGI, we bought, today's Wednesday, so we bought over Monday's high, and then we legged into a covered call when it had this little afternoon breakdown. VIAC, we're long stock, and that's gapping up over yesterday's high, so that's a good sign. I moved the stop to yesterday's low. Finally, Zynga, another, well, it's not a bottoming pattern like the others. It was a breakout and what I call the red bar ignored, similar to Delta Golf, which did not trigger. But if Delta, and there's not very much, there's no volume pre-market, but if this can still get over Monday's high, I like it. Because then we got 2 red bars ignored. Gappers here, CMCM 274. That's a big gap from a dead animal, so I don't know, something's going on with it today. McKesson, I mentioned to McGraw with the bearish gap down here to 141. McGraw, I actually would like the gap down better if it were into this gap, like 138. Then it would be a better condor. Wow, that thing trades whippy. Look at all those gaps, overlapping bars. Hey, TJ. Jake, put spread Home Depot. 141. I mean, maybe it's in an uptrend. 30-minute high. If you could get something under yesterday's low and the market's holding, we got a sell set up at the prior high on the weekly. So I would only do it short term. I wouldn't even go to next week on that one, Jake, but Friday should be okay. Marriott here, another sector that's been beat up pretty bad for obvious reasons, along with airlines, cruise ships, restaurants, tourism, casinos. But this one looked the best of the 3 main hotels we follow. So that's on our list. Yeah, Delta and UAL CEOs were on the phone today. And Joe Kernan asked, I think, whichever one, he says, don't you have to raise your prices? You got all these extra costs. You can't fly as full. And they just say he gave him a BS answer. But it's the identical discussion we had yesterday about how are these restaurants going to make money? You know, with all these extra costs, you got more costs and less revenue. That's not a good recipe for being in business. Tesla, we spoke about this yesterday. Somebody wanted to do a call spread, and I just said it's not our style because it's a bullish to neutral pattern. And I said if the Qs remain strong, this has an upside bias, and now it's gapping up. If this takes out yesterday's high, this is a Friday put spread candidate for me under these lows. So that we go through our checklist. The low here is 764. So go to your checklist. Go look at the options, see if they're tight, not spready, and go below 764 and see what your credit is. If it's a good credit, check earnings, of course. No news, you don't want to hold over news. And then we got ourselves a put spread for Friday. And Jake, I think you were asking about this as a put spread yesterday too. And I said, short term, it's okay. Took out the red bar and now it's gapping up. So yeah, keep an eye. We'll keep it. It's even better today because it's a bullish pre-market, and now, at least so far, it's trading above yesterday's high. So definitely see if you can get, yeah, we were talking about the 130s yesterday. I remember. I looked it up with you. YouTube's asking about Oki, little Oki bottoming pattern. There's been a lot of these. It's relative weakness, but at least I like the gap up. I like the MAs turning. So over, well, it's gapping over yesterday's high. So keep an eye on it. Maybe. There was a print here. It looks like a 3650 pre-market and it's coming in. So maybe 15-minute high on Oki might be okay. This ERI and PEN in the beat up casino sectors. I have both of these in our advisory letter, and the gaps messed them up. Just, it was a big percentage gap, and I didn't want to buy a 5-minute high, although they both would have worked. So that's ERI and PEN. Look, same with PEN. Well, I had this one as a put spread, and with the gap up, we didn't get our desired premium. But that sector getting beat up again. Hey, Debbie, in the journal today, I forget what city because I don't even care. But it said that there were 50 people waiting in line at some casino. So maybe that's what's given a little perk to that beat up sector. Facebook, we said yesterday, beautiful, beautiful 15-minute chart. This and Amazon yesterday is day trades. Beautiful right there. Beautiful breakout on Amazon. Some in the green room day traded that. We had a put spread on it where we took our profits pretty much near the high. But Facebook was in the journal today saying they're opening up Facebook stores, I think they call it. And it sounds like they want to compete with Amazon. It said that they're trying to get businesses to sell their goods on the Facebook store. Nothing to do with this though. Gap, it's a big old gap. June 1, all right. Walmart had earnings yesterday. Gap and resistance, there was no trade. But hey, Debbie, do you remember, shoot, what stock was it? Whiskey, Whiskey. Remember you were complaining all day that you wanted to short it this day? And Greg and I saw it down here, or at least I did after it fell too much. And I'm like, Debbie, where do you want to short it? And we had a long discussion. And I didn't answer you because I didn't see your comment at the time. But had I did answer you, it would be a sell setup. It would be an intraday M top. It would be an upside shakeout. It would be sideways consolidation, whatever flavor of bearish pattern that sets up that we teach. Oh man, that was not nice. So the reason I'm saying that to you, Debbie, is this actually gave one. This was a bearish filling of the gap. So you definitely wouldn't be doing it there. But now this is a bear flag with two topping tails. This is a 15-minute chart. So I got 1, 2, 3, 4, 5, 6, 7, 8, 9. I got over 2 hours. Wow, Q's popping here. I just don't trade in the first 5 minutes. Zoom is moving up. Our little 6 SIX is busting out on 15-minute chart. A shop is strong. So anyway, Debbie, let me continue. But this would have been okay to short because now you